All right, Will Biederbeck from Colorado Springs, Colorado. I think that I pronounced that right, Biederbeck. Asks, is a loan modification the same thing as a refinance? No, they're very similar, but there are a couple differences between loan modification and mortgage refinance that separate them. First of all, loan modification is the same loan, it's just different terms. It's a modification of the current terms of your mortgage. Whereas a mortgage refinance is a new loan entirely. You originate a new loan, you start from zero with a new lender or whatever lender you choose, and oftentimes those loans get sold and such. Both of them are aimed to lower the interest rate on the loan. A loan modification is generally sought to possibly lower their principal, make up for a home that's underwater. Whereas a mortgage refinance, the principal either stays the same and you just go after a lower interest rate, or your principal increases because you're trying to pull out home equity. In a mortgage refinance, your principal never goes down. In a loan modification, on some rare occurrences, principal actually does fall down. A loan modification can extend your term to 30 years or even more than 30 years, but the goal of extending the term is to lower your monthly payments. With a mortgage refinance, you re-amortize to 30 years because you're getting a new loan, and it's just, well, it's not always 30 years actually. Sometimes it's 25 or 20, depending on how much equity you have or what kind of payment you want. But you re-amortize the loan. You're not trying to stretch it out to lower your payments. Loan modifications generally are for properties that have zero equity, and oftentimes negative equity, whereas mortgage refinances have 20% equity, and they're often used to pull out money to spend on maybe investment homes or a car or whatever you need to use it for. The function of a loan modification is to lower your payments and keep homeowners in their homes. It's basically it's basically a corrective measure for a loan that was done that the homeowner can't keep up with. A mortgage refinance can be a corrective measure for a loan that you couldn't keep up with, but you have to have equity, and you have to have, good credit and the ability to make a new payment, improve your income, that kind of thing. You're getting a new loan with a mortgage refinance. You're modifying a current loan with a loan modification. The function oftentimes of a mortgage refinance is to lower the payments and or pull out money and raise the payments a little bit if you want to leverage that money in another way. So I hope that answers your question as far as the regard to loan modifications being different than mortgage refinances. They're not the same. They are similar, and oftentimes they're referred to as the same type of thing, but they're actually different. So, if you like this video, check out easyhomeloanmod.com/20-free-videos, and I'll hook you up with 20 videos teaching you pretty much everything you need to know before you get involved with the loan modification. Again, that's easyhomeloanmod.com/20-free-videos. Thanks.